Hello, it's Jeffrey Christian of CPM Group. It's actually 5:08 on Saturday afternoon here in New York on the 18th of January. I'm recording this for a release next Tuesday because CPM Group's schedule will preclude us recording a video efficiently, early on Tuesday the way we normally do. I want to talk about central bank gold policies and practices, what central banks are thinking about gold right now, and what they're doing with gold. Because the main point is that we'll make is that central banks have been buying gold and they continue to buy gold, but their buying has been lower in 2024, especially since March, April, May of last year, when the gold price rose sharply. Central banks pulled back from buying as much gold because of the higher prices. Additionally, central banks have been focusing more on their domestic economic conditions, which have been hostile in many countries, if not most countries, over the course of the last year. And they have been focusing on providing monetary support for economic activity. Additionally, the US dollar has been rising, and they've been focusing a little bit on that, despite what you hear from people who don't like the status quo in the world. There isn't a de-dollarization program going on. Central banks actually have been using their dollars to help stimulate their domestic economies. And since 60%, 58, 60% of their monetary foreign exchange reserves are in US dollars, and the US dollar is at a very high level, while other currencies are depressed relative to where they have been. Central banks have been using their dollars for their economic policies rather than currencies that are at their low end of recent ranges. So central banks buy gold and add it to their monetary reserves to have a diversified portfolio of monetary reserves for use in defending their own currencies and in terms of other economic development programs. They sell gold when they need money. And we've seen several central banks, especially in 2023, selling gold because they needed dollars to pay for imports. Now, over the last 3 years since Russia invaded Ukraine, Russia's central bank has been using its gold reserves to support the war effort and the government. Its foreign exchange earnings have fallen sharply. It's suffering from various sanctions, including bank transfer sanctions. And in this environment, the Russian government has been calling on the central bank to sell gold when it needs cash and to buy gold mostly from the domestic production, refining of gold mine production within Russia and some of its neighboring countries, and scrap recovery. People have been selling gold jewelry because of the economic hardships they're suffering due to the sanctions and the war. So Russia has been buying and selling gold. I'll show you some charts in a second. And that has masked the broader central bank gold policies and trends that other central banks are pursuing. If you look at central bank gold purchases and reductions, additions and reductions to their monetary reserves of gold, this is the last 3 years. You see, on a gross basis in 2022, central banks bought about 12.6 million ounces of gold. In 2023, they bought 18 million ounces of gold. Last year, on a gross basis, they bought about 9.3 million ounces. So half of what they had bought in 2023 and 3/4 of what they had bought in 2022. Meanwhile, other central banks have been reducing their gold reserves, selling some, or using small portions for gold coin programs. In 2022, the gross reductions of central bank gold holdings were about 2.4 million ounces. That rose to about 4.1 million ounces in 2023 As I said, there were certain central banks, Turkey, Uzbekistan, and Kazakhstan specifically, that needed foreign exchange to pay for imports. And so they were selling gold from their monetary reserves to generate dollars to pay for imports. And then last year, net gross sales were about 1.7 million ounces. So continuing to sell. On a net basis, central banks bought 10.2 million ounces in 2022. That went up to 13.9 million ounces in 2023. And last year, on a net basis, it was 7.6 million ounces. Gross purchases fell 50%. Gross reductions fell about 2/3. And the net is 7.6 million ounces, down from 13.9 million ounces. So central banks are buying gold, and they're buying recent historically levels, decent levels. I'll show you some charts in a minute. But they're not racing into gold. The data for 2024 is through November. We don't have December data yet, except for China. It's only through October. All of this data is coming from our Precious Metals Advisory and our gold yearbooks. The charts that you'll see here are coming from the Precious Metals Advisory. Now, the number of central banks buying and selling gold, in 2024, 20 central banks bought gold, which was the same number as 2023, and it was down from 22 in 2022. So you have more than 180 central banks, monetary authorities, treasuries, ministries of finance that own gold around the world. And of those, about 20, right, so maybe close to 10% of them are actually buying gold. It's not a broad-based central bank gold buy. The number of central banks that were selling gold or reducing their stock was 12 last year through November. That was up from 10 in 2023 and 8 in 2022. Part of that reflects the higher gold price. As the gold price has risen sharply since 2022, some central banks have sold some of their gold to take profits. Again, it's a relatively small portion of the central banks that are active in gold. Here are some charts, again, from the Precious Metals Advisory that we issued in early January. And this is annual gross and net purchases and reductions by central banks. And you can see it's down from recent levels. It's down to where it was around 2020, when central banks were focusing on trying to support their economies during the COVID lockdown, global economic lockdown. But it's still very high. It's still high. 7.9 million ounces is a relatively high level, and it's in line pretty much with the low end of the range that we've seen for most of the last 14 years, 16 years. You'll see that in 2022, central banks bought, as I said, what was that number? 10 million ounces on a net basis, 12.6 million ounces on a gross basis. It wasn't 20 million ounces. It wasn't the highest level ever. We saw central banks buy a lot of gold, like more than 30 million ounces in around 2015, for example. So central banks pulled back from buying as much gold, but they're still buying a lot of gold. Higher gold prices have caused some central banks to pull back because they tend to be price sensitive. The stronger U.S. dollar has attracted central banks to add to their dollar holdings because it's been rising. And they have really been focusing on domestic economic conditions and less on buying gold. Insofar as some central banks have reduced their dollar holdings, it's because they're trying to use those dollars to stimulate the economy and keep their country out of a recession. And they haven't been selling dollars to buy gold as much as, again, demagogues would like you to believe. This is on a monthly basis. Again, you can see great variability. That variability partly or largely reflects what's going on in Russia. Before I talk about Russia, I'll show you China. China paused its gold purchases again in the second quarter of 2024. It had stopped buying in July of 2019, and it didn't resume purchases until November of 2022. It didn't want to pay those higher prices. When the gold price went from over $2,000, $2,060 or so in the first quarter of 2022 down to 1640, fell about 20%. By November, the central bank, the People's Bank of China, started buying gold again. And they were buying gold into the second quarter of this year. Since the second quarter of this year, they haven't been buying. That's a price sensitivity. And again, a refocusing of the People's Bank of China's policies, not so much on adding to its gold reserves or diversifying its monetary reserves, as it is focusing on trying to help the Chinese economy do better, grow better, and avoid contractionary conditions. Russia, as I said, has been using its gold reserves to finance its war effort and to finance its government. And so it's been buying and selling gold. On the left-hand side, you see the changes on a net monthly basis. On the right-hand side, you see the actual levels of central bank reserves. I'm sorry, I actually have the same chart there. I apologize for that. But you can see that they've been buying and selling, and that creates this volatility in their holdings, and it creates volatility in overall central bank activity, which masks the policies and trends that have been going on at other central banks. That's all I have on this. It's pretty much straightforward. We will be coming out with our gold yearbook in March, late March. It will have updated data on central bank activity as well as a tremendous amount of history, including the gold sales in the 1970s when there was a demonetization effort or part of the IMF, the U.S. Treasury, and other central banks. We'll have our silver yearbook in late March and our platinum group metals yearbook in late July. We'll have our silver facts and fantasies seminar in late February. We will be doing an open session for our clients, our paying clients, retail investment product clients, as well as other clients that buy our research or consulting services within a couple weeks for anybody who is a client. It's just an open Q&A. People can send in questions ahead of time, or they can ask questions during that event. You can go to our website, pre-order our yearbooks for this year, order last year's yearbooks, see a lot of free reads, studies, and other things. You can send us an email at info@cpmgroup.com and talk to us about what we can do for you. That's all I have for now. Take care of yourself. Take care of people around you. Try to do something good for the world. I'll talk to you next week.